In this presentation, we're going to discuss the cash basis of bookkeeping for a new business. Almost all new businesses do their accounting on a cash basis, and then someone, usually their accountant, adjusts to accrual afterwards. Of course, theoretically, cash basis accounting isn't really acceptable for income tax or for formal reporting for shareholders and other stakeholders. But let's get real. Not many new businesses have to report to shareholders, except themselves, and posting a few adjusting entries to adjust from cash to accrual is child's play for most professional accountants. They do it almost all the time for their small business clients. In this video, we'll show you how to take downloaded transaction records from your bank and prepare them for your accountant or bookkeeper. They will then summarize the data for entry into your year-end file or upload it into your accounting software online. The first thing to remember is don't share your banking logins with anyone. Download the data yourself and provide the data to the service provider. When you go to your online banking site, you'll see something like this. Of course, every bank is a little different, but essentially you'll be faced with something like this. Remember to download all of the transactions within the date range for the accounting period, generally a year. And also, while you're at it, download your credit card transactions if they're with the same bank, and if you use your credit card to purchase things for your business. Finally, remember to download the bank statements and credit card statements that cover the beginning and end of your accounting year, or whatever period you're getting the accounting done for. Usually, this will be in portable document format, or PDF. The reason that we do this is that we need to have confidence that this is really from your bank and not merely some fictional data we're assembling for a sinister plot to fool the tax department or your investors, if you're lucky enough to have investors. Of course, you're not supposed to use the cash basis accounting method for filing your taxes in Canada unless you're either a farmer or a fisherman. Then, as allowed by Section 28 of the Income Tax Act, the accountant can select either the cash basis, as defined in Section 28, or the accrual basis. While the cash basis is generally understood to be much simpler than an accrual basis accounting system, you wouldn't know that if you tried to read Section 28 of the Income Tax Act yourself. Somehow, reading Section 28 is a bit like reading computer source code. But it doesn't matter what kind of business you're really in. If the business is small and simple enough, it is often easiest to work throughout the year on a cash basis than have your accounting technician or bookkeeper adjust to accrual. CSV stands for comma separated value. So if we look, the pieces of information or fields, so each separate column within a row of transaction data, each column is separated by a comma that becomes a single field within the transaction record. So in this case, we have 2006-12-31, which is a date field, or a date, then followed by a comma. Then we have some sort of a description and a reference. Each of those discrete pieces of information is called a field, and the row together, taken together, is a record within in terms of database technology. So what we're doing is we're going to load this eventually into a spreadsheet software package. We'll use Excel, but you could use LibreOffice or Google Sheets or some other tool to open this up. So let's do that now. So we'll open up the data file using a spreadsheet. So the CSV data file is a little ugly when we load it into Excel. So let's take a look at what we can do to make it a little easier to work with. So here, what we've done, we've changed the column width to accommodate the data so you can actually read it. Then we've inserted the first line in the spreadsheet with column titles, so date, description, reference or ref, check, deposit, balance, and category. There was no data in category. That's what we're going to have to add here so we can summarize it. Okay, so you're going to format the columns to make them a little bigger, give column names so that the data starts to make sense, and there we have it. So once you've categorized the transactions by just typing in a category for each transaction record, each row in the database or spreadsheet, it's a simple matter for your accountant or your bookkeeper to summarize all of the data for the period by category. Simply create a pivot table. And here you go. Here are the pivot table fields. So we're going to take a sum of the check, a sum of the deposit, and then the rows will be the categories. And there we have it. We now have essentially a year's worth of transactions summarized by category.
In the preceding slides, we showed how transaction data can be summarized by your accountant. Your job is to download the data to your computer or content management system like Google Drive or Dropbox. Categorize it, and then share it with your accountant. That's it, and we think that is pretty darned easy.